Chapter 8, Banks and the Magic of Finance, Notes and Summary from Class 7th, Subject Social Science, Part 2. Introduction, Financial Infrastructure. This is a network comprising banks, payment systems, stock markets, and other financial institutions. Purpose, it supports economic activities by helping people, businesses, and the government manage money and facilitate financial transactions. Connection to physical infrastructure. Just as roads and railways, physical infrastructure support economic movement, financial infrastructure funds their development and maintenance. What are what are banks and what do they do? Definition: a bank is a financial institution that collects money from people as deposits and lends it to borrowers as loans. Role: they make monetary transactions easy by offering services like saving, withdrawing, and borrowing money. Account holders: to use bank services, individuals or businesses must open a bank account, after which they are known as account holders. Hold deposits. Banks provide a safe place for people to keep their surplus money, which can often earn interest. Types of bank accounts: saving account, designed for individuals to save regularly and earn interest. It allows adding or withdrawing money, though monthly withdrawal limits may apply. Next, current account, meant for businesses and traders who perform many daily transactions. It generally has no withdrawal limits but does not earn interest. Fixed deposit (FD) account, a one-time deposit kept for a fixed period, example 3 or 5 years. It offers a higher interest rate than a savings account. Fourth, the magic of compounding, the story of a king and a sage. Compounding, this is the process of earning interest on both the original amount and the interest earned in previous years. It leads to exponential growth, where money grows significantly over a long period. The story: a king from Kerala challenged a sage to a game of chess. The sage asked for a simple reward: one grain of rice on the first square, 2 on the second, 4 on the third, doubling for all 64 squares. The result: by the 32nd square, the requirement exceeded 210 crore grains. This story illustrates how small amounts can grow into massive sums through doubling or compounding. Tracking growth, banks provide a passbook, a diary like document that records all receipts, credits, and payments, debits. So, friends, when you receive money from someone into your bank account, it is called credit. When you transfer money from your account to another account, it is called debit. So incoming money is credit, outgoing money is debit. Fifth, offer loans or credit. Purpose: banks provide loans for various needs, such as buying homes or vehicles, funding education, or expanding businesses. Interest on loans: banks charge interest from borrowers, which is higher than the interest they pay to depositors. Source of income: the difference between the higher interest charged to borrowers and the lower interest paid to depositors is the bank's main source of income. So let's talk about source of income. Suppose there are two persons, A and B. So A is depositor who deposits his money to bank, and B is a borrower who borrows money from a bank. So money goes from bank to B. So here interest is high and here interest is low. So let's understand by this. Suppose interest gained by A by depositing money to bank is rupees 50 and interest gained from B by the bank is rupees 80. So 80 minus 50 is equals to 30. So 30 is bank income. Sixth, How the Jan Dhan Yojana revolutionized banking in India. Launch. The Pradhan Mantri Jan Dhan Yojana was launched in 2014 to provide every Indian access to a bank account. Features. These accounts require no minimum balance and have no opening fees. Impact. Over 50 crore accounts have been opened primarily by women. It has enabled direct transfers of wages and scholarships, reducing middlemen and ensuring timely payments. Seventh, other financial institutions, post offices, offer popular savings schemes like National Savings Certificates (NSC), Kisan Vikas Patra, and Sukanya Samriddhi accounts even in remote areas. Specialized institutions, IFCI funds businesses in sectors like power and textiles. NABARD supports rural development by funding banks that provide loans for farming and village infrastructure. 8th, Reserve Bank of India, banker to banks. Central Bank. The RBI is India's central bank, established in 1935 and serving the government since 1949. Functions. Maintains accounts of other banks and facilitates funds exchange between them. Prints and distributes Indian currency, fixes the benchmark interest rate for lending money to commercial banks, supervises the entire Indian banking system, and sets its regulations. Ninth, payment modes and systems. Definition. Mechanisms that facilitate the clearing and settlement of financial transactions between parties. Cash withdrawal, withdrawal slip, a form filled out at the bank to withdraw cash at the counter. So friends, this is a withdrawal slip. ATMs and debit cards, automated teller machines ATMs allow 24/7 cash withdrawals. Users insert a debit card and enter a PIN, personal identification number for security. 10. How can money be transferred from one bank account to another? Money can be transferred through paper-based instruments or instant electronic methods. Definition. A paper instrument that instructs the bank to pay a specific amount from the issuer's account to another person's account. Process. It requires writing the receiver's name, amount and a signature. The process is time consuming as it requires physically visiting a bank. So friends, this is a picture of check. Here you write name of person you wish to pay here. Here amount of money in numbers. Here comes signature where the check issuer needs to sign. This is MICR code and this is check number, and the whole combination is called MICR band, and this is check issuer's account number. And here you have to write date on which you wish to issue the check. 12th, debit cards and point of sale POS machines. Retail payments. Debit cards can be swiped or inserted into POS machines at stores to instantly deduct the payment from the customer's bank account. So friends, this is a POS machine and you insert an ATM in this machine or simply tap on it to make the payment. Next, internet banking, net banking, online access allows account holders to check balances, view transaction history, and transfer money via a bank's website or mobile app using a computer or smartphone. So friends, like this, you can transfer any amount using internet banking on a computer. Next, mobile payments. Digital apps, payments made through smartphones using applications like Bheem. Benefits. Users can check balances and track transactions anytime on their phones without needing physical passbook updates. So friends, this is QR code. So you can scan this QR code and make transactions using UPI. 15. Unified Payments Interface UPI, India's gift to the world. Launch. Introduced in 2016 by the National Payments Corporation of India (NPCI). Process. Enables instant funds transfer using a QR code or phone number. The user scans a QR code enters their UPI PIN and the funds are transferred instantly. Global impact. Known for its secure and user-friendly design, UPI has been adopted by countries like Nepal, UAE, France, Sri Lanka, Bhutan, and Mauritius. Next, stock market concept. A marketplace stock exchange where people buy and sell shares, which represent part ownership in a company. Purpose. Individuals invest savings expecting their value to increase, while companies issue shares to raise funds for operations. BSE, the Bombay Stock Exchange, this is the full form of BSE, established in 1875, is one of the oldest in the world. Market fluctuations, share prices rise, boom, or fall, crash based on company performance, government policy changes, or economic shocks like pandemics or wars. Financial frauds and how to prevent them. Common scams. Fraudsters use fake calls or messages to trick people into sharing OTPs, one time passwords, or bank details to steal money. Safety tips. Never share personal info like PINs, passwords, or OTPs with strangers. Avoid clicking unknown links or videos in messages. Report fraud. Use the 1930 helpline or the National Cybercrime Reporting Portal. Before we move on, summary. Financial infrastructure includes banks, payment systems, and stock markets that ensure smooth money flow. It encourages savings, credit, and investment, which are essential for a nation's prosperity. While digital payments offer convenience, staying alert against cyber fraud is vital for financial safety. So friends, we have completed notes and summary of chapter 8, Banks and the Magic of Finance. We will do all the question answers of this chapter in a separate video. If you like the video, kindly like, hype the video and share it with your friends. Also subscribe to my channel and press the bell icon to receive new video notifications. We will meet in the next video. Thank you for watching.